Hello and welcome to the Podin Along podcast with myself, Steve Rastall. I've got a special guest today, someone I haven't seen for 31 years, since we were both students running around in Oxford, Crispin. But I'll let Crispin introduce himself. So lovely to have you here, Crispin. Please tell everybody about yourself.
Well, thank you very much for having me, and especially after all this time. I can't believe it's so long since, like I say, we were plodding around Oxford, causing trouble, no doubt. So I'm Crispin Moger. I ran a business called Marmalade. We did young driver, specialised in young driver insurance, mainly insurance. We also did vehicle purchasing and a combined package for car insurance for young drivers, all geared around getting young drivers on the road. Built and sold that business, started it in around 2005, and then we sold business to Atlanta Group in 2021.
Yeah, it's just from afar. I remember reading about the business and seeing it in newspapers, and knew it was you. So I always used to track it then. And it seemed like you had a differentiator in there where young people were finding it hard to get on the road. Through that time, telematics came in, and it was just getting them on the road. Just tell us a little bit about how an established market like that you decided to go and play in and make it work.
So I was actually sort of making some notes earlier and thinking about this, and I was reminded of, fun enough, our time at uni. And I think you had a Renault 5 Turbo.
Yeah.
And I had a Citroen Saxo GT. No, was it a Saxo?
No, it was an AX
GT. Sorry, yeah. And I sort of remembered, like us bombing around the countryside. And I mean, I was lucky. My dad worked in cars at the time, and I drove a lot of cars at a very young age, and I was incredibly lucky in that respect. But I also was very mindful of the number of times I probably came close to a cropper. And I was sort of thinking about that. A lot of that has always played on my mind, and how difficult it was for young people to drive. And I've always had this sort of thought that, young drivers, they need that time on the road and they need that experience. And weirdly, I think I was a much better driver. Not saying I was a great driver, but a better driver because I drove a lot. I covered a lot of miles. I used to deliver cars all around the country and things like that. So when it came to looking at the problem of young drivers, and I mean, just briefly, we were approached by a couple of companies who were having issues with retaining young drivers or young staff because they couldn't get into work because they couldn't afford the insurance for the cars, or they just couldn't recruit them in the first place because they couldn't afford the insurance to get it into work. And again, so we went into this with like really no knowledge of insurance at all. My background was cars. I knew about cars. I knew about finance, leasing, pretty much every model of car there was because I was involved in selling them, but I didn't know anything about the insurance side. And it wasn't until we looked into it and realized that, one of the biggest issues around young drivers was that the personal injury, the potential for personal injury and long-term personal injury coming out of the back if they have an accident. And of course, young drivers statistically tend to have more accidents in their first couple of years. And so we kind of looked at this problem, and then, so coming back to the two cars we had we 18, 19, something like that. And Citroen being a prime example, that if that ever ended up in a crash, you were absolutely stuffed. That was going to be obliterated, and if you survived, you weren't going to be in pretty good. You weren't going to be in very good shape. And some of the research we did around it found that most people's first car, the average age of most people's first car was something like 13 to 15 years old, which is quite. You think back in we were in sort of 93, 94 when we were at college, when we went to college. So you're looking at a car from the 1980s. That's someone's first car, and you start thinking about that and you think, God, there's a lot of people. So, people running around those cars, what safety features did they have, if any? You look at sort of safety features on cars now. So when we started Marmalade, I think NCAP rating they've been brought in, more and more cars were getting airbags, if not all cars had at least one airbag. And you had sort of ABS and, various other things. And so what we kind of looked at is, okay, well, if we can find a way to get young drivers into a new or nearly new car, so with ABS, with an airbag, that sort of thing, then at least if there's an accident or a crash, then chances are that they will walk away, or there's a better chance they will walk away. And that was really the whole premise of Marmalade. And it wasn't until sort of a number of years later when we looked at it and went, you know what, I think we changed how insurance, or certainly how we approached it, because most insurance companies looked at it and went, well, how do we just mitigate our costs in the event of a crash? And that seems to be all they really care about. And our whole model was, well, let's just stop them having a crash in the first place. And if you can...
go on. Yeah, when you look at that, you're right about the cars, because that Renault 5, I had a girlfriend's dad describe it as a turbocharged skateboard.
Yeah, that'd be about right, yeah.
And you're right. You do look back and think, I wouldn't have wanted a bad moment in that. And I did try, I think, at times. But getting to the point of business, it sounds like what you're saying then, if we dig this one a little bit, you identified what was a traditional industry with a problem, and then looking at that problem in a new way, and then innovated, I think, fixing that problem. One with getting them in a new car, solving the insurance, telematics, all those other things have come in, and using tests to tech to profile risk and all of these things. Is that, do you think, was the driver? And the industry was almost like, we don't want to service them. I remember my insurance being about 12 or 1400 quid in 93.
Yeah, well, that was exactly the problem. And it was one of these things, and it's this irony, we're still getting it today, and it is still causing young drivers a problem. In that, there's this whole push here, Martin Lewis, people like that, go on aggregators, or go on the comparison sites, get a quote, get multiple quotes. But what happens is your loyalty to any particular business is reduced massively. And those whole models work on churn, and which is great on an aggregate level, because it means that, once you're over a certain age and once you're that sort of average customer, then your premium comes down. But if you are not an average customer, so if you are a young driver, then what tends to happen is your premium goes up, because whereas, if you were back, I suppose, when, again, can be using an example of us at uni, our parents may have been with, I don't know, Aviva for their home insurance, for their car insurance for the last sort of 5 or 6 years, because there wasn't as much churn. And so the insurers could look at it and go, well, we've probably got Mr. and Mrs. Rastall, we've had them for the last, I don't know, 5 or 6 years. And then if Stephen joins us, then, hopefully we can hold him for 4 or 5 years, so we can then spread that risk out over this period of time. Of course, once you start getting more churn, what happens when insurance companies go, well, we can only price for a year because we only know that person's going to be with us for 1 year, 1.5 years, something, whatever it might be, but a much reduced time. And when it comes to young drivers, you go, well, what's the chance of them having a claim? Pretty high. Therefore, we have to price accordingly. And so actually, the whole thing went even more against young drivers. And so coming back to the problem, it's then we're looking at going, okay, well, how do we fix this problem? And it was interesting. We went round, once we started the car insurance package, and that started to get some real traction. And then we looked at our learner driver product. And we went round literally every insurer in the market, and everyone said, you've got to be joking, young drivers, and especially learner drivers, we don't want to touch them with a barge pole. And yet we found just one who would support us. And in a very short space of time, we were contributing quite a significant amount to their bottom line, because the loss ratio on learner drivers is very, very low. And nobody had even worked that one out, because they'd all assumed, well, learner driver, they don't drive, they don't even know how to drive, let alone being a young driver, if that makes sense. But what nobody had thought about was the fact that even the most stupid parent generally doesn't want to die. And so if they're driving with their young, their son or their daughter in the car, it's not often they're going to get them to hammer it down the road and drive like an idiot with them in the car. So, you've got that person putting the brakes, metaphorically speaking, on the young driver. And so if there is a claim, it's normally either someone else's fault or it's a small bump here and there. It's never a major thing.
It's not lifetime care.
Yeah, nobody had thought about that until we started doing this product. And then suddenly we were doing it. And the insurers are looking at going, bloody hell, look at the loss ratio on this. This is incredible. This is like an unheard of loss ratio for young drivers. Now, of course, the problem then starts kicking a bit more once they pass their test, because, they haven't got a supervisor. But that's when sometimes the benefit of then telematics and things like that. And again, our approach in trying to solve the problem was, right, you've now got a young driver out there on their own, how do you mitigate that risk? And that, that's when you look at it and go, well, okay, you can use a virtual parent, virtual supervisor with the telematics box. It's not a perfect solution, but it can act in that way just to rein people in. And, it's that thing, isn't it? It's the first couple of years. You don't know what you don't know. When you're a young driver, you definitely don't know what you don't know. And it's not until sometimes you've experienced those things and, in my case, coming out the other side and going, my God, that was a stupid thing to do, but at least I got through it. Of course, you don't want that experience for your youngster, but if hopefully with the telematics box, if they start to sort of go, okay, let's just rein it back in, and then they just build up that more awareness. And again, and so that's kind of a big part about how we approached everything. Just right, there's the problem. How do we go about fixing it?
Because when it joins dots that, and it seems quite simple the way you put it now, Crispin, because I guess it is that, they look at the lifetime value of that client, and then they look at, well, we've got them a year, they're at the most risk in that year, and all the things you said, and it seems quite obvious. Because we look then at the acquisition cost as well of the client. So, we have multi-years that we usually work with people. And typically, they stick quite a long time, often 7+ years. So that acquisition cost then can be spread, and you model that and you look for it, don't you? But I guess the insurers have, at that point with the internet and this price comparison, they almost all started eating their own lunch and cannibalizing themselves, didn't they? By, creating that model. And
it's absolutely, and it's one of my frustrations with the industry is I genuinely think the insurance industry is broken in many ways. And there may be other industries in a similar way, but exactly that. So, the price comparison sites have become so big, which is great, good luck to them. But what happens is that everyone's competing and fighting for that business. And so, it becomes a race to the bottom. And then you get this, and then, people then wonder why their renewals are starting to cost more. Well, the problem is that everyone's been writing the initial year at below the actual cost of what it should be. No one's making a profit in the first year, which is just bonkers. And fun enough, I was thinking about it, like some of the problems we had growing the business. Well, that was a real issue for us because our whole model was that we need to try and make profit on every deal because you never know when your supplier, when your underwriter, whatever's going to change their mind or whatever. But a lot of people we're competing against was kind of doing this 3-year model, so they would run at a loss for years 1, years 2, hope if they could find some way of retaining that business for year 3, they might just start to eke into a profit. But of course they're subsidising everything. And then you start getting in all the claims management companies that are buying leads and things like that. And again, you're competing against those people. Because in the early days, we looked at that and went, it doesn't seem morally right to me. The insurance company should be doing the job for everybody, but they're not. And then you just got this silly system of, just...
In what way, Crispin, in the moral side, you mean with the claims where they want to play both sides of the fence and they're not looking after their customers?
Absolutely, yeah. And you kind of think, well, the insurance company should be managing this, and they should be managing it to the best for the customer. But often the case is they aren't. So, example, I spoke to someone the other day, exactly this problem. They knocked someone about 250, in their mind, 250, 300 quid's worth of damage, yeah? Suddenly this bill comes through for $7,000. And this person's going, well, why are you paying this? And they went, oh, because the other insurers put this in. It's too much money to fight it. It's like, but that goes against me, So that if I go and renew my insurance, I've got to put down that the claim's been paid for £7,000. I know that tops that would have been £500. But the whole, but because they've got I can't drive the car for 3 days. So they've had a credit hire vehicle out for 3 or 4 days at £1,000 a day. And then you've added in parts and things have been inflated and this, that, and the other. Whereas what the insurer should have done if they were genuinely looking after their customer was go back and go, look, we think it's worth this. We're not paying any, or at least send out an independent assessor or something like that. But it doesn't happen. There's so much of this stuff going on because everyone's trying to line their own pockets. And so when it comes back to like the credit insurance, well, I mean, we were towards the end of Marmalade, we could make about $250,000 a year, something like that, from involving a credit hire company who then looks after our customers in the event of a claim. Now, for years, we didn't want to do that because we were like, well, that's the insurance company should do that for us. But then what happens is, you go against a competing business, you're $250,000 down on a competing business before you've even started. If you understand where I'm
So
coming from on that level of
you
it.
can't give up that revenue because you can use it somewhere else or something else and offset and use the margin to, it's
And you have to play the game, like admin fees, for instance. For years we didn't do admin fees because we just said, look, we think it's wrong. Just charge the premium. But then you find out that people are fiddling the system. So an admiral, for instance, might go, oh, it's only 200 quid for your insurance. Oh, there's an admin fee of 50 quid here, an admin setting up fee of this, because there are ways they can sort of. I'm using admiral, but maybe a lot of them do it. But the way they can sort of. It's legal and it's absolutely fine from the FCA point of view, but it's just pushing the system a little bit. So suddenly they're getting, 250, 300 quid more, or whatever it might be, out of the premium.
Yeah. I guess they look at it, Crispin, don't they? And they think, how do you go top of the search listings? How do you get that lead? How do you get that competitive interest? If we don't, we're not at the races. If we do, it's not great, but you're damned if you do, you're damned if you don't. And then if you don't join them, well, you're not even in the race.
Yeah, absolutely. And it's so difficult to get it right unless you can get, a significant uplift saying customers by saying we don't do admin fees, which we tried and, ultimately it didn't work. You have to just play the game, which is it doesn't feel right. And I think the customers are not generally getting the right deal or getting as good deal from the industry as they could do because there's so much smoke and mirrors.
Well, that you fixed the problem and you got that going. Just give us some numbers and context over that, I think, nearly 15, 18 years or whatever you were involved or longer. How long was it? About nearly 20 years? Oh, no.
Nearly 20 years, yeah.
So how many started? Where did it go? What did that business look like on the way through that?
I mean, in terms of customers, we certainly do a few 100,000 customers each year. I'd say towards the end anyway. And obviously, it was more weighted in the early days. It was more, certainly for the first 4 or 5 years, it was more around annual policy linked to the car. Then once we started doing more short-term policies, then obviously numbers of customers shot up. The length of time that we were holding on to those customers for was less. So you then typically have customers for sort of 2 or 3 months on average when they were learning to drive, and then hopefully there'd be a little policy afterwards. But in terms of where we got to this, we were turning over insurance premium sort of between 30 to 40 million a year.
So what did it look like day one? Because I know that it was proper, no funding, do it yourself, have a go. Just describe what the team looked like. And I'm thinking, how did you start? And then we could talk through to where that got to and how that journey took place.
So, when we first started, we were in a barn at my parents' house. There were, I think, 3 of us, maybe, one of which was my wife. And there was a chap called Simon who actually stayed with us right the way through. And my father was involved and another guy called Nigel. That was for probably about a year or so. Then we sort of moved to another office in sort of a place called Whittlesea, which is sort of a bit back or beyond. And again, then we sort of managed to get up to about 8 or 9 people in the early days. But, it was very much, our focus was very much on, we don't need some really expensive office. We don't need to, waste money on that. It was all about, look, we're not customer facing necessarily. And we'd rather spend the money on getting a really good web system, getting, developing the product rather than having some flashy office that people can, see, but no one actually really comes to. So, but it was, certainly a few stories that probably went well. Noticed, outside toilet at one place, got a bit nippy in winter and that sort of thing. It was a real, you'd come in one day and you'd find mouths of weed on the desk or something, and it's like, lovely. It was really kind of, basic in the early days.
You get that going and you've got those challenges of just doing it yourself, i.e. starting from nothing. What do you think then was the key moments in that where the business got a break or a change that accelerated it upwards?
So I think it was, there's a couple of things. I think longevity helped. I mean, we were talking a little bit earlier about that kind of to an extent. And I think, most businesses go bust within 3 years, don't they? Or way before that. And I think, once you can get past that 3 years, you're in, not in people's psyche, but you're there. People start to remember you. Oh, well, you've been around for a little while. You can't be completely useless, kind of thing. So there's that. We got some really good support from a couple of manufacturers, Fiat being one, who helped us with the combined insurance, car insurance, which again gave us some credibility, something we were very good at, and something I would encourage any young entrepreneur to really think about. And I can't stress this enough: is get the name of your business right. Really think it through. And I know, some people go, well, what's in a name? The name Marmalade did us so much good. I mean, it's one of those things I can't quantify properly how much it did. But I remember we nearly did a deal with M&C Saatchi. And I wasn't actually at the meeting, my father was. And it was going to be sort of sweat equity or something like that, and probably completely confidential, so I probably shouldn't mention it. But anyway, but anyway, it was a good meeting. The reason I mentioned Saatchi is because, obviously well known for marketing. And from what I understand, as they left the room, they said, whatever you do not change that name. And, you think about, just for what we did, insurance as an example, in what's perceived to be a very grey, dull industry, which it generally is. And we were all about bright orange and, standing out and being different. And it made such a difference. And I think that was, it opened doors for us. I remember another time where these telematics guys came down from up north to talk to us, and they're in the office, and we'd already got a deal with Halfords. And so in every time you bought learner plates from Halfords, our sticker was inside for learner driver insurance. And this is probably 3 or 4 years into the business, if not a bit longer. And these guys came down, and they were like a £250 million business or something like that. And it kind of, you can see them looking around the office going, this isn't what we quite expected. And they went, look, we've been trying to get into Halfords for years. How the hell did you guys do it? I said, have you got another site? How many people have you got here? And at that point, a couple of our guys walked out and went, that's half the sales force that's just walked out the door. And they were like, how the hell did you manage it? And I went, well, the name got us in. We had a guy, a couple of guys, Nigel particularly, worked with us, who had a skin like a rhino, would never put off stuff, and managed to get his way into some of these places. And again, it was sort of combination. So, it's probably a long way around answering your question. But, it's things like that, just sort of trying things differently, looking at things going, look, we can't compete on money. We don't have deep enough pockets. We need to find another way. Can we be creative? And I think that was probably a massive part. Probably was a big part of how we managed to keep going. Then when we brought that learner driver insurance really transformed the business overnight, because it improved our cash flow massively. And then with obviously the growth in Google, pay-per-click and all that sort of stuff. And then we managed to really ride that and do really well on that. And that again works. So, because we could work out very quickly where our sales were coming from. We knew exactly how much we were spending in acquisition costs, and we were able just to pump money into that and know we were getting a result out of it. And that really transformed the business. And then, of course, that then gives you even more credibility. And then you start talking to other players in the market, other insurers, etc., and they can see what you've done over there, and that just helped massively.
Yeah, it's because a few observations there. I have a feeling you picked the name. I've always felt that. I don't know if that was right.
It was. I mean, there's this hot debate. I think it was my mum that came up with the actual name Marmalade. I had suggested we needed a name that we could do anything with. So we'd had a name like Car Clubs or something like that, and we were doing employee-related, motor-related benefits. And people kept thinking we did company cars, or we were part of like the Austin Car Club or the Rover Car Club or something. And they're like, and they just didn't get it. And so I had in mind orange phones, and just the fact that
it was a colour at that time, wasn't it? My first business, I picked orange because you had orange, and it seems to be green these days a bit more.
Yeah.
But yeah, back then it really was where it was at. And I remember that name and it stuck once I knew it was you. Because, you'd start seeing it in Daily Mail and other things, about the story, and it was quite different. So the other bit that you described well, Crispin, is you got that going. You then got into Google, and in my first business, Google was critical to me growing that. It was quite early doors. If you learned it early, a lot of bigger companies weren't there straight away. I'm talking like 05 to 10. These days, that's very different. It costs a lot more. It's competitive. It's much harder to make that work as a channel. You getting that working, and then you then almost implied, I think, that you then worked out what it cost to win a customer. You could pour more in. You got good with that. You were generating the cash flow off this learner, insurance piece you were doing. And then that was piling back in that gave you the growth. How much of that just happened, or how much of that was quite clear strategically? We create the cash. This is the sausage machine for winning a customer. Right, let's keep it going for as long as we can. You hit a wall, you go past it. Just talk us through a little bit about how that drove growth.
Well, it drove growth in terms of it opened the door to a lot more customers coming in the door. So if you look at when we did the combined car insurance, you had much more profit per unit, but fewer customers. This was obviously higher volume, smaller margin, but it was much easier to track. The lag on it, if that's the correct terminology, lag from someone seeing an advert to buying, was much less. So you could see the results much more quickly. When you buy a car, I mean, I don't know how long you tend to think about it. I'm probably mulling over something for 3-4 months maybe before I make a change, and that was sort of seemed to be the case with a lot of people when it came to cars. There were very few people that woke up one morning and went, do you know what, I need to buy the car. I've forgotten to buy Johnny a car for his birthday. We better crack on with it. I mean, it did happen, but it wasn't very often. Normally, it was quite a long, drawn-out process, and there could be multiple touch points as to where they went before they committed. Whereas we were seeing a much quicker turnaround for people looking at Learner Driver and then purchasing from our touch points. So in the early days of it, we actually used it much more as a marketing tool to get people on board to then do the annual premium combined sale off the back of it. But really, we almost used it as a funnel. But that was kind of the mindset. But it was always about, that's the first point on the journey for then getting annual policy. I mean, had I have stayed at Marmalade, or had I maybe done it, have we not sold, had we done it a different way, then my sort of ambition had always been to, again, have the Learner Driver as the starting point, and then you build out from there to multiple other policies. It bugs me beyond belief that there is so much churn, and that so many insurance businesses are so, I don't know what the word is, so happy to lose their customers and don't fight hard enough, either because they're being too greedy or they just don't care. I don't know what it is, but for me, it's like every customer that went upset me. So I want that loyalty, and how do you find that loyalty? You try and find incentive to keep them. So that was always the kind of model, was to try and get them in early, get young customers in early, give them a good service, and hopefully you retain them in the next product and another product beyond that.
Yeah, you've got that. It sounds like you got that acquisition sweet spot, and then you were cross-selling into that to get those, and then trying to keep them in there. And because of the nature that the market probably wasn't full of other offers, they were more likely to stay for a bit. So your averages and the numbers you could deliver were probably well above the industry, as in, length of time, maybe probably margins as well, with the nature of doing something different rather than the price bit. And I guess that's what made you appealing as an acquisition target.
I think so, yeah. I mean, I'm hoping that was the case. And certainly we built a strong brand, I like to believe we built a strong brand in terms of customer service. And certainly it was something I tried to drill into everyone, all the time within the office, that, we need to understand, we need to listen to customers, talk to customers, spend time with customers. And part of that had been, I had this big thing against companies that were timed you on the phone, that, it was that, get them in, churn them out quickly, quick, don't spend too much time. If someone's not interested, get them off the phone, that kind of thing. I wanted guys, spend time talking to customers to understand and also be honest and straight with customers. Go, look, you know what? We're not the right company for you if that was the case, because I still firmly believe that can still bring customers because people respect your honesty. I just think I have this feeling that people don't like being lied to, don't like being bullshitted, don't like being, just told what they want to hear, even if it's not true. I'd rather be straight with people. And I know a lot of customers came back because they went, look, right, the first child, it didn't work for us, but you were so good with us. You were so honest and straight with us. We've come back and tried you out for, child number 2 or child number 3 or whatever it might be. It was, I never thought anybody in the business was above speaking to a customer, all that sort of stuff. And again, I think that all sort of fitted in with the whole thing about Marmalade and setting yourself out to be different. Is you have to be the things that you set out. You can't just, stand up for something and not really do it, just pay lip service to it. And I think a lot of companies do that now. You've really got to kind of walk the walk as well.
Yeah, because I think I'm thinking back now, and I'm thinking that I remember going to Stanford with you in about 93, 94 and staying at your mum and dad's house, and your dad was he was in the car trade at the time. And you then got involved, and there's a few that started this. So there's a family aspect to the business. So how did that family aspect work over all those years? What's the ups and downs of that? Because I worked in a family business as my first job for my dad.
Yeah, I remember it. It was really tough in many ways. And, weirdly, I've learned a lot more. I've given it a lot of thought since we sold the business. And I wish there were things I could change or go back and do or do differently. And, maybe advise other young, family businesses to do. And I think, so one of the problems that we probably found was, whilst we're broadly aligned, there was definitely an element of crossover in what we were doing in our role sometimes, and sort of a bit of job swing for position, that kind of thing, which can be unnerving for staff and can be difficult, from a relationship point of view with family. And a lot of it wasn't until I left the business and I went, I can see why we did things the way we did. And maybe we weren't clear enough about our boundaries of, what am I doing versus what's my father doing versus what's my brother doing. My brother joined much later in the business, but even so, having those clear lines of demarcation, clear positions, because I think, on the one hand, it's fantastic because on the whole, you're there for each other, you have each other's ultimate support. Certainly in our business, we did. However, there were some, a number of times where it got really heated because even different generational work ethics, as I'm sure, many people, and if there are any people watching this that are family businesses, what was, say, a way of working back in the 70s or 80s is not necessarily the way for working now. I mean, I'm probably shaved. For a number of years going into the office, my time, why haven't you shaved? Why are you not wearing a tie? Because I'm not seeing anyone. I don't need to wear a bloody tie. Why are you calling me on a Sunday? Well, I'm working. Well, good for you. I'm taking my daughter to a tennis match. Things like that. There are all sorts of different ways of doing it, which is very different. And you have to find that balance. And certainly I don't think we did. I mean, where it worked really well was when we made that decision to sell. And then I think we were absolutely 100% aligned. And that actually was one of the smoothest processes in many ways, because I think we'd hit that point and gone, okay, look, we've made that decision. It was post-COVID. It was sort of later in 2020. And we've gone, we don't know what the future's going to hold. I turned 45. Dad was sort of coming up to 75, and just couldn't square out how, am I going to take it on? How am I going to do it? How am I going to raise enough money to buy Dad out? We couldn't square off. So that's when we sort of let's just push for the sale. And actually that went really well because we were all clearly focused on how we're going to do it. And I think that's the thing that a lot of family businesses probably don't put enough time and effort into, or don't get help. And I wish I had. I really, really wish we'd got some proper help in to go, look, really think about the family dynamic. The funny thing, some of it wasn't even until I did my MBA in 2016, 2017. And just some of the stuff I learned from the organizational behavior, just, really looking into the dynamics of how people work. And just sort of seeing these traits going, all right, that's why he does it that way, and that's why I do it this way, and that's why we're clashing all the bloody time. And I would imagine it happens in so many family businesses and obviously other businesses. But, but they're being aware of it, and sometimes it is difficult conversations, but you really need to address, they need to be addressed, because actually there's so many could be successful businesses that are being hampered by that. I mean, one of the things that I struggled with the most, which I think, I'd be interested to know, how many other people had this, whether you had this when you were working with your dad.
Yeah.
But a lot of people used me as a proxy to get their way with my dad, or it sounds really wrong, but, it's, or to undermine me or to undermine him. And again, that was one of the biggest challenges we faced was, I'd go into a meeting and go, why are we doing this? Oh, we agreed it with your dad. Really? Why did you not come and discuss it with me? Or vice versa. And then you'd have those, and then it would end up with me and my father going, what the hell's going on here? And it's like, oh, well, I thought they'd agreed it with you. Or I thought I don't know whether you ever experienced that sort of being played off against each other, or being used as that sort of.
I know what you mean. It's always a challenge, and we didn't have my dad was a bookie, and he had some other business interests, and the business was never run like, a professional larger business like yours was. But one story I remember about my dad was that when they did Sunday racing, I used to work for him 6 days a week. So I'd have a Sunday off. Sunday racing came in. We're opening the shop. You'll now work 7 days a week. So I didn't get much more money. But I was a young lad, and this was after college, after we had been living down in Oxford.
Yeah.
Post that. And I was in the family business. And some Sundays I remember I just had enough, and I didn't go in, because I'd been out with my friends and I was a young lad and I was 23 or something. And then he'd play hell with me, and where are you? It only happened once or twice. I could drag myself there most of the time. But there was those expectations on me. And then I had other people who worked in the business always, they think you're there because of your dad, and you are in a way. But I did a really good job with the bit I had. It did better than it had ever done before. I did a few different things. I was still very green. But I know exactly what you mean. But as you were saying that, I think you were saying you look back and you do things differently. Have you got an example there, Crispin, of what that looks like? Is it not to have the row? Is it just to let things ride a bit, just be a bit more sanguine? Or is there like a structure or an approach you'd take? Because I think some level of friction is inevitable with families in a business.
Of course, yeah. Yeah, I think there's a few things. I think one is I would be kinder, which I know so everyone puts out there, but I would be kinder to him and kind to me, in terms of, there were times where I genuinely thought he was just kicking me about, and he probably thought the same thing. And actually it wasn't that at all. It was, we both actually had the best intentions. We both wanted to do the right thing for the business, but we just had different approaches for doing it. And I think we didn't always articulate those in the best way. So, one way, would be going back and finding a better mechanism to put those forward, and maybe, have time where we could discuss it before it was opened up to the floor, maybe, or, make sure we're aligned perfectly before we bring it into anyone else, because then that gives people an opportunity to find those cracks, I suppose. I think a sort of clear definition of what areas that we covered, areas of responsibility, because there was sometimes a bit of kind of fluidity, and, we'd start doing something and then one of us would jump onto it and take a bit more. And then suddenly it's like, who's actually responsible for this? And, where are we going with this? And I don't always think that was the best way. So I think, right, I'm responsible for X, Y, and Z. You're responsible for, C, F, and D, or whatever it might be. And then we come together on the odd thing. I think, we should have been better at that. And I think if I ever did it again, that's absolutely what I'd make sure was clearly sort of put out there.
I think they're good points, because I think this links to another thing I've felt. And you've had a lot of success with that. And you did, and it was in the press, and you've sold it, and you've done what a lot of people dream of. And in my own different way, I feel the same. But I look back particularly on the first two businesses, which in a way blended into one. I didn't always realize what was happening and enjoy it on the way. Even though it was successful, it was all about getting where I was going. And I do look back and think maybe I should have enjoyed it a bit more or seen the good bits. Everything I made hard and just wanted to drive on. And maybe that's why I was successful too. Do you look back like that now thinking, Jesus, yeah, you've done well, but it just seems a blur when you look back?
Yeah, I think, very much so. There's things I look back and I think, we could have done it better, could have done it differently. Without doubt. I think there's a lot of decisions that we made that probably at the time seemed like a decision, and then afterwards, or our gut decision, our gut was like, I'm not sure this is right, but we made the decision. Then afterwards, you go back and go, yeah, I wish we hadn't made that decision. But then, some things were aligned that you thought that should be the case. I do. It was, but I mean, there's certainly, definitely wish there were things I could go back on and just change how I was with my father, because there was a lot of time where there's a lot of, we did really well, but things were just going so fast, and I think there was a lot of challenges that maybe didn't need to happen, and it would have been, and then sometimes I do feel guilty about that. I mean, I probably shouldn't, because I don't think he thinks twice about it, but yeah, it's still something that bugs me that I wish. And I actually, one of the ways the business was set up is that I took a lot of the credit. I was fronting the business, so the entrepreneurial awards and all that, and that doesn't all sit right with me, because it's never just me. It was never just me. It was the team. It was my dad. It was everyone. And so I wish that could have been shared out a bit more as well.
Yeah, but maybe for the brand and everything else, sometimes you need a figurehead.
Yeah, true.
You have to do it, and it's what gets the result. Because I think then, the thing then is you took those people on, you've got the family, you employed more and more people. What would you say? Because having great people can be the best part of what you do when you like working together, but can also, I found, be the hardest. If things can go wrong, you do get ones who are not right. What did you take out of all that? And I don't think we'd probably have time for it all, would we? The bits that come to mind straight away, Crispin.
Yeah, I mean, certainly, we had some good people from the early days, absolutely, but we also had some people that weren't right. And I think, we definitely employed some people too quickly without really looking at what we wanted or who was the right fit. And I know in the early days, someone came along, they vaguely, had experience in one area. Right, you'll do. Yeah, you're breathing, you've got arms, you've got legs. Good. Right, yeah, here's the offer. I think we should have been much tougher on that, and obviously, you build experience and you get better at recruiting and better at getting people on. But I still think we could have done that better in the early days. We might have moved quicker. I mean, it's that old adage, you do, when you're a startup, you kind of look at people and go, we don't want to spend too much money, do you? See, whereas actually spending a bit more, you get that more rounded, you get a more experienced person sometimes, and they help push the business on because they've got that experience. And we probably didn't do enough of that in the early days. It took us quite a while to kind of really get that right. I mean, I love the people I work with. I mean, I've really enjoyed it. But I suppose as you get bigger, that one sadness, and it still makes me sad today, actually, is that, as you know, CEO, MD, you can become quite isolated. It can become quite lonely. And I miss the early days when I was in the office with everyone, and I would hear most conversations. I'd know what was going on everywhere. And that was in some ways when I worked best, because I could pick up on all those vibes and I could work out what needed attention. And I think, sometimes when you're CEO position, you've got people reporting in, there's definitely an element things get filtered. And I've tried really hard to make sure things weren't, and that people could approach me whenever. But I never fully realized how worried people are about that title, because titles never bothered me. And I don't know whether you've ever found this, but I never had a problem talking to anybody, whether it was my upbringing, whether it was a school I went to, I don't know. If someone would talk to me, I'd talk to them. I didn't worry if they were CEO or CFO or MD or whatever. I just talked to them. And it was a real eye-opener for me. I remember one day where there was this guy who I thought we got on with him, he's fine. And everyone went, he's absolutely terrified of you. And I was like, well, what's he terrified of me for? Because you're the CEO. I went, well, so what? And I hadn't realised that someone said, you don't realise what it's like when you have that power that you can hire and fire people, whatever. And because I've never used it like that, but hadn't realised, and that was a real, I say, I'm a bit of a shame in some ways, because then it made me think about actually that interactions with people, and then it almost made me take a step further back, because I was worried about, I don't know, what's the word I'm looking for? I never wanted to make people feel uncomfortable, and that's a harder bit as you grow, because, kind of what I think made Marmalade really good in the early days was that we all got on, we knew everyone, and we all backed each other up. And then obviously as you grow, you try as best you can to get that culture to spread all the way down, but it's not always that easy. And sometimes people interpret that culture, and then it's not always or interpret, my way of doing things, which is how the business is or should be. And it doesn't always filter down directly. So sometimes you get people going off on slight tangents. I don't know if that makes sense to you, but it was...
There's loads of things that connected in my experience there as well, such as hiring a bit too quick or not thorough enough. We were in a very growing market, which was talent light, so it's very difficult. We either had really good people or limited people, I found, and a few in the middle sometimes, or, people who were capped. And I used to always feel, and this isn't a very nice way to put it, but it explains it. We were trying to make silk purses out of sow's ears, and trying to make people what they weren't, because they needed it to work and we needed it to work. And it made life very much harder than it needed to be. And then I got some great ones who really changed the business. And, it was very much one or the other. And the other bit you're saying about you don't realize your impact. You just see yourself still as you, and people see you different, and you don't think you're any different. So you don't think they think you're any different, but you are to them. And I know what you mean by that. And I think the other point you made that's really good is subtly, there's a really golden moment in businesses, and you don't always know when it's going on. When you're with the team and you know everything's going on, and you're working with people you like, and it's growing, and things are going well, and there's that real drive and buzz in it. And you get that moment, and you don't always realize that's that moment. And then you look back and you think, that was the really good bit. And it changes. And I think those moments in your business, starting in a barn, rough edges, getting the breakthrough, building it bigger, hiring those people, and then moving towards the sale, and you were saying you're all aligned. So what was it like selling your company?
It was, I suppose, it's a mixture of emotions. Once we knew we were going down it, and once we were quite a way down it, I had resigned. Well, not resigned, that's not the right word. We were happy with the deal. And so therefore it was like, right, the moment that's signed, it is someone else's baby, not mine anymore. And I will do what I can, and I'll work hard on the exit period, etc. But it's not mine anymore. And actually, I surprised myself. I thought I'd miss it more, if that makes sense. I didn't. I mean, I did. I didn't. I loved the guys I was still working with. I wanted to do the best for them, but I saw it as my job to do the best I possibly could for that transition for them. But, once that decision was made to move on, or to sell the business, then it was like, okay, it's done, and I'm doing it for these reasons. And I was fine with that. The process up to it was tough. But actually, I really, really enjoyed that sale process. I really enjoyed the due diligence. I enjoyed managing that process immensely. Weirdly, because everyone says it's going to be incredibly stressful, but I really, really almost found my mojo, what we'd done before. But I just really, really thrived on it, because it was just pulling everything in, and I wasn't doing all the work myself. I was sort of conducting, I suppose. I just found I really had a flair for that. I just did, and it's sort of thing I'd love to do more of, actually, because it all just worked quite well.
So on that side of things, if you were advised, say you went in, and I know you do a little bit of advice in and around that in a consulting sense, until you've done it, you've not done it. And the most important thing you probably sell in your life is a company, especially the first one. So what advice would you give in getting that right for people out there who want to do it?
Okay, so the most important thing, I think, and funny enough, I sort of advised a friend on a similar thing, is you've really got to know what are you getting out of it. It's really, really, what's the word I'm looking for? Easy to go, let's sell it. If someone comes along with an offer and you think it's a good offer, but is it a life-changing offer? And I know it's all relative depending on where you are. So, I need to sort of, put that in there. But as an example, right? So a friend of mine was drawing, say he's drawing 200 grand a year out of his business. Yeah, he's doing really, really well. But because of where his business is he could probably sell it for, say, 1.3 million, for argument's sake. And he is similar age to me, so nearly 50. And I was thinking, right, if, in my opinion, if he was, say, 65, 70, yeah, cash in, you can get that out of it. Nice, massive lump sum, mortgage cleared, everything's cleared, the kids are out of school, everything like that. So, that's good. You've got your retirement money, yeah. But at the age you are, you're drawing a bloody good salary. And I know you're still going to work, but you're going to be bored. You're going to want to do work anyway. So he's still going to be working. And for the next number of years, you can still be drawing that money. You can be making good profit off your business. To me, that doesn't make sense doing. And he was like, yeah, do you know what? You make a lot of sense there, because it's once that business is gone, once you've sold it, you can't bring it back. You're right. You can maybe go off and try and do it again, but it's like you've got to start all over again. You've got to build up traps, which is not the easiest thing to do. And so I think, when people are looking to sell their business, you've got to really think it through, because whilst there might be a nice carrot dangled there, or you might perceive it as a nice carrot, is it really? Imagine that you are not getting any other income coming in bar that money that you've just made selling that business. And then ask yourself, does it look as good?
Well, I think you're right, because as I mentioned before, my dad was a bookie, turf accountant, call it what you will. And they did well, and it did good money, but they were as they were. On a multiplier, as people would see it today, they were quite limited. So he used the phrase, it's worth more alive than dead to us, because we were talking that maybe over 3 to 5 years, you could pull that money back. So then it's a case, well, how do you then maybe step out of the business? What is the long-term possibility of those revenues maintaining? How much effort's needed to do that? But you do get used to living on it. And I remember through my second business, I'd have spreadsheets about the recurring stuff outside of the main business I invested in, how much I could have, what I'd have at 50, 55, 60, all of these different things. What do I need to live? How would I maintain a lifestyle we'd got used to? And you're right, and you do look at it, and I think it sounds slightly facetious, but the first thing I sold, I got 600 grand for. I knew at the time, and admittedly I was in my 30s, it was never going to be enough, that, and it sounded great, and that's not to be flippant, but I wasn't going to sit on the beach for the rest of my life at that point, because I'm not particularly big spenders relatively to income back then. We weren't at all. But you've got that. I think people just see the number, and then how long does the number last?
Yeah. And of course, and like you say, you don't want to be flippant about it, because, if you're doing a job that's, what's the word, there's 25, 35 grand a year, if someone offers you 600 grand, you'll never ever see that amount of money. You might not ever see it, and it looks huge, but actually, what tends to happen, as we all know, is you start living to your, to what you're bringing in, what you've got in the bank, and then suddenly you spend a bit of money, and it doesn't take long. You move into a bigger house, and then suddenly you've got to pay for expensive. I realise these are all first world problems, and I'm not asking for anyone to get out of violin or anything. But when it comes to selling your business, to give advice, you do need to think about these things, because they're really, really important, and that ability to earn. And there are times where I've looked at what we're doing, and don't get me wrong, I've done really well, and I'm really proud, really pleased with what we've done. But you get used to living on that salary, and again, even that flip change of you've got money coming in every month as a salary or dividends or whatever it might be, and then you sell your business and then nothing's coming in, and it's sitting in a bank or it's invested or whatever it might be, and all you see is it going one way, because you still got to pay if you've got a mortgage, or you still got to pay for electricity, or you still got to pay for school or college or whatever it might be. And that psychologically it might sound stupid, but I think it does take some getting used to. And so, coming back to again your question, it's like, that would be my biggest bit of advice, is just understand what you're trying to achieve from this, and then look at the process of how you want to do it, and then start to target and go, right, am I looking for a trade buyer? What do you care if your staff are looked after? Do you not care if your staff are looked after? And hopefully people do, and so they want to do the best thing for them. But again, you need to factor these considerations in. I mean, again, if you're going to sell, make sure you look at a number of different corporate finance firms, because they are not all equal and they will not charge you equally. And I mean, the range of fees that I've seen that we were quoted between different corporate finance firms are massive. Huge, that's 7-figure differences in what we were quoted. And that is money that if it's your business, you won't be getting if you go for the higher one, or you may be getting more, or that's money you can spread out to the staff. So there are a lot of considerations that you can think about, and again, making sure your senior team, making sure everyone's aligned on it. And I guess if you're the majority shareholder and you can do what you want, then fair enough, you can do it. But getting people on board and getting the rest of the team on board and making sure everyone is hopefully pointing in the right direction will massively help when it comes to that sale process, because what you don't want is someone putting a spanner in the works deliberately or not deliberately, or because that can have a massive impact on your saleability.
Yeah, you said something, and I was thinking, gosh, I haven't always thought about why I carry on. I do a bit, but maybe I tell myself things. And that idea of I had it in 2018, I've got this amount of money, and up to then I'd always grown wealth individually. Ups and downs, but a good trend upwards. And I did think, this is it. And now I'm in a decline the rest of my life. And I wanted to maybe, and it wasn't that it was greed. It was more, that scares me a bit because I'm not that old. Maybe I do want to carry on. And that's why I'd probably do other things. And another guy said to me years ago, and I don't, it's like, maybe it's a bit of a slant on me and maybe it's true, but he said, you like Mr. Burns, Steve, you'd give it all away for just a little bit more. But I think the reason why is when you start with nothing, you're always scared of going back there. And that
absolutely, yeah. I completely get that.
It's likes to change. You have those pressures too, because you've got to a point and you think, I don't want that to not be there. So you work these things out and you keep pushing forward, and you do grow into your lifestyle. The less you do so, the more secure you are in a way, in lots of ways. But
completely, yeah.
So got the sale done. I know it was a couple of years ago, nearly, give or take. What happened to Crispin? How did you feel? How did you feel your time? Did you actually think about, when you don't go there anymore, what do I do? How will I feel? Who does that make me today? Does my identity change? And all those other bits, because it's such a big part of your life.
Yeah. I mean, in some ways, it's been brilliant. And I mean, obviously, I'm very happy that we sold in many, many ways. I think you made an interesting point about identity. And I think that's something that every now and then, not very often, but, I used to be Crispin, CEO of Marmalade, and now it's just Crispin. And every now and then it's a bit like, oh, right, okay, and it's not that I think I have a big ego or but I think being a part of that business had some purpose. And I was trying to everything was thinking about what am I doing in relation to the business. And since I've left, then it's about, well, what am I doing for me or for my family? And there's an element where I miss that, I think, sort of being involved in that and just sort of seeing where that goes. So, sorry, my dog has decided to walk under the table and start chewing something loudly, so I apologise.
Yeah, so we have office dogs here. I think that's one nice thing when you start up and just do it as you want, like we do these days. You could do what you want. I know what you mean with that. In 2018, when I had the 6 months as things were transitioning out, last business I did, I went to my daughter's sports day, and I was talking to a parent, and he asked me what I did. And I thought, well, I don't really do anything. I count my money, and I'm working out what I might do. And I didn't want to lie, because I thought, well, I am in software, but I thought that's not really where I am. I'm coming out of that now, and I'm not sure where next is. And during that 6 month period, that was probably a key moment for me, because I went home and I thought, I didn't know what to say.
Yeah, absolutely.
I've had that really awkward because I thought, well, I don't do anything. I'm 45 and I'm retired, and I'm just standing here, sports day, because I haven't actually got anywhere else to go. I'd be there anyway for my kids. I've always tried and make those things.
Yeah.
That
I
was
know
like
exactly what you mean.
moment. And then I thought, oh, I need to carry on.
Yeah, and I've had that a few times. And when people go, what are you doing? It's like, well, not very much. I've been doing a bit of gardening, play guitar or something. And it's like, oh, right, so you don't work. It's like, well, I do. I mean, I've almost actually started saying to some people I'm retired just because I think it sounds a bit better than, I do sod all.
You don't have to explain yourself then, do you? It just closes the conversation down. It's like when I meet people like you and they go, what do you do? And I go, I work in IT. And that normally ends that. And they talk about something else. Or, before you bore them to tears about techie stuff. Or they say, can you fix my Wi-Fi? And that's it.
Although I might have to start saying I'm in IT because weirdly, I was one of these people, I never really liked talking about the business and what I did. It's what one was I was awful at networking. I was fine if I found people I got on with, so if I was at networking with you or something like that, it'd be great, go and have a few beers, have a chat, and generally we wouldn't chat about work. But it's when people go, what do you do for a living? It's like, I do insurance, please, just, because I could never understand why anyone would find that interesting to talk to me about. So I might go, I'm in IT or something, and just bugger up.
So what's going on now, just to start rounding out? I know you've got some coffee stuff going on, I've heard.
Yeah, I have. So, yeah, I do a bit of consultancy. I am very keen to get back in now to work. I mean, I'm out of my restriction periods and stuff. So I'm sort of looking for opportunities of things where I can get back in and make a difference, whether that's setting up my own business again or whether it's, passing on some of what I've learned to help people so they don't go through the same grief that I did in the early days. But also, as you say, we're doing coffee business. So just went round, I don't know why I kind of got into it. I found this amazing shop in Chamonix that you go and you can smell the beans, try them out and everything. And I wanted to replicate that over here. So I went and learned coffee roasting, learned be a barista, researched coffee in every which way you could. And now we've sort of set up this coffee business with sort of artisan roast coffee, freshly roasted. We've just expanded to do tea, albeit I'm using a different supply for tea. But again, like going out and finding the best coffee and tea I possibly can, and then just trying to, push it out to everyone that's around. Weirdly, like we've named all the coffees after our dogs. We were trying to find a way to honour them, and everyone else was like, sort of twilight, sunset, or Colombian morning or something, which all sounds good, but didn't really do much, not necessarily. So what we tried to do was find the character with each dog and sort of bring that out. And but again, I mean, the main thing is about coffee and just trying to find some really, really good flavours. And so, I mean, feedback's been really good so far. It's still early days, but it gives me something to do and generally a better conversation than insurance.
Yeah, I'd agree. I'm going to buy some. You'll see my order come through.
Excellent.
Here. I'll do that. I'll make a note. So I got one last one, if I may, Crispin.
Okay. Yeah.
How would you sum up the last 31 years since we were living in Headington?
Well, I can't believe it's been 31 years for a start. I mean, it's gone so quickly. It's frightening, isn't it? The world changed, I think, so much. It's been a roller coaster, I think. As you probably found, I think but I mean, I don't regret a lot of it. I think probably there's quite a few wrong paths we went down, but I think you learn so much. And it's interesting. I made a note about this, and sorry if I'm banging on, but I think a lot of people now, they want everything to be laid out for them. And I remember having this discussion with one of my ops guys at work, and it's like, how long do you take to train them on the phones now? And it's 3 months. Really? 3 months to get on the phone? It's ridiculous. I look back to, the days where you and I together, we just cracked on with it. And I think there's so much more in those days. So I'm not trying to, harp on about old times, but I do think there's a lot to be said for just trying things, failing at them and going, okay, well, that didn't work. I've got something out of that. Let's go on to that. Because you learn so much. And there's almost that fear of failure, I think, a lot now with a lot of things. And I think that was over the last years, I've failed a lot, but actually I've learned so much from doing that. And I think that's a really good thing.
Yeah, I'd agree. There isn't a syndrome. You're not an imposter. You just don't know what you're doing yet. And it's uncomfortable until you do. Do more of it. Pretty soon you get good at it. Then you're not uncomfortable with it. You might do it wrong. Yeah. It's like, that's it. And that's not to be dismissive of people. Everything's a little bit overcomplicated, but I know what you mean. It was a case of JFDI back then, wasn't it? Just do it. And I think it did serve me well. Yeah, like we'll go and do this, we'll go and do that. But it's been great having you on. So Crispin Moger,
brilliant.
yeah,
Thank you. It's been brilliant.
yeah, built Marmalade, sold it, and now selling coffee. It's not a bad story, Crispin. I look back. I don't think in '93 you would have guessed the both of us might have done this. I think we were probably candidates for looking a bit suspect.
Yeah, I think you probably were.
You can't judge people on their early 20s, can you?
Definitely not. I mean, it's another interesting point, but I just came back to felt. I think absolutely so many people write themselves off, and this is to anyone who's got young kids or thinking about themselves. Is what? Sometimes you don't flourish at 17, 18. We went there at college at 18, 19. I was a bloody disaster doing that law degree, and thank God I came out of it. And then I went on and I did other things. And you know what? It wasn't because I was stupid. I just wasn't ready for it. And I think there's so many people that are like crushed because they haven't done, or don't think they've done well when they should have done. And actually, it wasn't the right environment. It wasn't the right time. You can get to where you want to in many different ways. Just got to keep plugging away at it and trying different things.
Well, I think that's it. I think we'll put the pause there. That you just got to keep plugging away, Crispin. Spot on.
Cool.
Thank you very much.
Yeah, brilliant. Thank you very much.